Welcome back to Real Estate 101. I'm your host, Joe Terceira, and today we're going to talk a little bit about working with a mortgage agent, and I'm pleased to be joined by Ewa Zaba of Centum Way to Save. Ewa, welcome to the show.
Thank you for having me today.
So, why should someone who is looking to buy a home work with a mortgage agent or broker?
Well, you know, the client would like to be, most of the clients would like to be informed. And working with the mortgage agent, we have access to many lenders and we can find the right lender for the right client. If they go just to the one bank, they will get the information from one source, and that's not always beneficial for the client.
Okay, and in regards to when shopping for a home, does it benefit them to have a pre-approval?
Oh, it's so much easier to shop for a home when you have that paper and saying that you are ready to buy. When you have a pre-approval, you can win. You know, you can win the war about the home of your dreams. You can purchase that property. You can be the stronger buyer. So it's really important. And then it's really important. Then you know up to how much you can really afford. So if you have that paper telling you that you are pre-approved, you're ready to go.
You're ready to go, absolutely. So what documents does a buyer require in order to obtain a mortgage?
There is a whole list of documents. We want to be sure that the buyers have a down payment, and this is one of the most important because they need to have a proof of down payment, even if they have the whole amount, but they need to have a proof of down payment, minimum for 90 days.
90
so
days.
Yeah, so the bank will require 90 days of funds, and if they have the money, if they saving account, if they have it under the mattress, you gotta put it into the bank.
Right.
So those little things are really important. We also need we need to be sure then you pay your taxes, so your income tax need to be done. We need to have your notice of assessments. This is the main things. Notice of assessment. So we know then you pay to Revenue Canada. We have your income on your income tax. We need to pay stubs from your work and the letter of employment.
So a job letter.
Yep.
How many lenders do you have access to?
We have over 40 lenders. So there is a choice for the buyers with over 40 lenders.
Now, when working with a mortgage agent, what are the benefits in terms of interest rates? Can a buyer get better interest rate by working with a mortgage agent?
See, when you go to one bank, this bank will offer you whatever you have. When I work with 40 banks, like I'm telling to everybody, with the banks it's just like with the regular shopping in your grocery store. There's a sale always somewhere.
Right.
So either this store will have a sale or this one. Same thing with the banks. Either this bank will have a sale or this bank will have a sale. So with so many lenders, there's much better choice, and definitely buyers will benefit of the lower rate.
And how much down payment do they need typically for a home?
Well, it all depends on the documentation that they can provide. With someone who is fully approved, we need 5%, or we can get that 5% down from the lender, so we can have
a 5% cashback.
Cashback, yes. So if they have the right income, they can come up with approximately zero down. They will need maybe 1.5% just to for the closing costs.
How important is credit history when it comes to obtaining a pre-approval or even getting approved for a mortgage?
Credit history is very important. It's extremely important because that will either allow you to have a mortgage or no. That's the one thing. And so if someone doesn't have a more credit, then they need to establish the credit. To establish the credit, we need to have minimum of 2 lines of credit, so 2 credit cards or a car rental, or so we need 2 lines, and we need to have a limit on it on 1,500. So and that's how you build up your credit. If you have a good credit, then the interest rate, you can have the best interest there is on the market.
Now, can someone buy a home without having a credit history?
That's really hard. You gotta have some credit history.
So Eva, tell me, can a self-employed person buy a home?
Absolutely. We need to have a little different documentation. We need to prove that the self-employed person is making money. We need to see the documentation, then he got some kind of contracts or the bank deposits. So there are the ways to get the mortgage for a self-employed person without any problems, but we need to have something, some documentation, right, showing then. Sometimes we can see then there is income coming into the account, to the business account, and we need to have a registration of the business. That helps out build the credibility of that business, right, even if there is not a lot of income showing on the income tax.
Now, when someone comes to see you to use your service to get them a mortgage, do they have to pay you?
Usually no, the banks pay us. So this is a win-win for a client, because they don't have extra fees for our services, and then they can use the knowledge that we have and the backgrounds that we have.
Okay, so Eva, I want to change gears here a little bit, and I want to talk about interest rates. Specifically, what's the difference between a variable rate mortgage and a fixed rate mortgage?
Well, those are 2 different products and 2 different qualifications for that product. Variable interest rate, it's interest rate that can change. Right. So it's based on the prime rate. So a year ago we had programs that was prime rate minus almost a point. So it was prime rate right now is 3%. Or minus 1 point, so it was 2% almost. So that was a big difference. And fixed rate, it's fixed through the whole term of the mortgage. So it doesn't change if the prime rate is changed.
Right. So when you say term, for a lot of people that don't understand, term means when you go apply for the mortgage, you may amortize the mortgage over 20 or 25 years, but the actual rate you're getting on the mortgage will be for a term of 3 years or 5 years or whatever you decide to do with the bank.
Yeah, we have the programs for 1 year, 2 years, 3 years, 4 years, 7 years, 10 years. So wherever it's best fits you, that's a term of the mortgage. And the amortization, it's the whole life of the mortgage. So we can put the amortization right now up to 25 years.
That's the longest you can go now?
With
the changes that they made?
Not really. We can go up to 35 years still.
Can you?
Absolutely.
And I guess that specific lenders will do that.
That's specific lenders with the specific situations, but that's still available even if the changes was made.
Okay, for today's final question, is it better to pay your mortgage bi-weekly or monthly?
Well, that's a great question, because if you will calculate it, when we pay bi-weekly mortgage, when we make payments bi-weekly, we pay is equivalent of 13 monthly payments. So we make 1 extra payment
every year.
Right. And most lenders would allow you to pay up to 15 or 20% of your mortgage extra yearly, so you can add.
And that goes right to principal.
And that goes right into principal. So it really doesn't matter if you pay that extra payment 13 on the end of the year, or is it every 2 weeks you pay a little extra.
Eva, that's some great stuff. You brought some great information today. If anybody has any more questions or needs more information on mortgage financing, they can get in contact with Eva at Centum Way to Save. Thanks very much for watching. I'm Joe Terceira, and we'll see you next time.